Good evening, and welcome to the Crypto Overnighter. I'm Nicodemus, and I will be your host as we take a look at the latest cryptocurrency news and analysis. So sit back, relax, and let's get started. And remember, none of this is financial advice. And it's 10 p.m. Pacific on Sunday, July 23rd, 2023. Welcome back to the Crypto Overnighter, where we have no sponsors, no hidden agendas, and no BS. But we do have the news, so let's talk about that. First, we'll look at El Salvador, where Bitcoin adoption has led to an unexpected boom in the country's bonds. Next, we'll take a look at Ripple's strategic moves as it expands its operations and forms a new partnership amidst its ongoing legal battles with the SEC. Then we'll delve into the drama at Alameda Research, where leaked diaries of former CEO Ellison have added a new twist to an already complex tale. Following that, we have some good news from Anchorage, which is witnessing an expansion in its institutional crypto pie. But what does that mean for the rest of the industry? We'll then discuss the recent controversy at DxSale network, which has led to a debate about security and fair compensation in the crypto world. Finally, we turn our attention to Nigeria, where a social payments app shuts down its crypto exchange. At the same time, the central bank doubles down on its digital currency, showcasing the dynamic and unpredictable nature of the crypto space. El Salvador is the pioneer in recognizing Bitcoin as legal tender. The tiny nation has seen a significant surge in the value of its sovereign bonds this year. The bonds have risen by 60%, closely following Bitcoin's 80% gains. This sudden demand indicates a considerable shift in sentiment around El Salvador's financial position. A year ago, the yields for El Salvador's 10-year debt were as high as 24%, comparable to distressed economies like Ukraine and Argentina. However, El Salvador managed to repay $800 million of short-term debt in January, along with interest, defying both media predictions and credit rating agencies. Last year, Morgan Stanley suggested it was a good time to buy Salvadoran bonds with the expectation that the government could manage its interest payments in the short term. Aaron Stern is the chief investment officer at Convertium Capital in Montreal. He stated last summer that the nation's bond prices were divorced from fundamentals. The market was worried about the administration's willingness to pay. Now, El Salvador's bonds seem attractive compared to the debt prices of other emerging market nations. Current data shows the nation's bonds yield between 14 and 18%. Even so, despite their strong performance this year, some believe it's not time to sell yet. El Salvador's bond performance has mirrored that of Bitcoin over the last year, experiencing a crash in the summer of 2022 before rallying in the first half of 2023. This is a clear testament to the power of decentralization and the potential of cryptocurrencies. It's a real in-your-face moment for central banks and governments who've been quick to dismiss the value and potential of Bitcoin and other cryptos. El Salvador's success story is a beacon of hope for other countries struggling with their economies. It's a clear message that embracing financial freedom and privacy can lead to economic prosperity. And speaking of making waves in the crypto world, let's move on to our next segment. But before we do, show us some love, hit that subscribe button, like the episode, and share it with your friends. Now, let's talk Ripple. Ripple, the company behind the XRP token, has been making significant strides in fostering stablecoin adoption. They've recently formed a new partnership aimed at this very goal. This comes amidst Ripple's ongoing legal battles with the US SEC, where Ripple is fighting allegations of conducting unregistered security sales. In a separate but related development, Ripple applied for a cryptocurrency license in the UK. This move indicates Ripple's intent to expand its operations and influence in the global crypto market, despite the ongoing legal issues in the United States. And let's look at those legal issues. The SEC has been hinting at a likely appeal to overturn portions of last week's decision in the Ripple Labs case. This appeal is expected to be part of a separate enforcement case against Terra USD and Luna creators Do Kwon and Terraform Labs. The SEC lawyers have argued that parts of the Ripple decision were wrongly decided and the court should not follow them. They also signaled they are considering various avenues for further review and intend to recommend that the SEC seek such review. The appeal would likely challenge the part of the Ripple decision that determined that blind bid or programmatic sales of XRP to third parties did not fit all of the criteria of a securities offering. The SEC lawyers argued that the Ripple decision appears to improperly add a requirement that promise of return be made directly to an investor, and that each investor know that their money was going directly to the promoter. One crypto lawyer, John E. Deaton, has stated that a potential SEC appeal in the Ripple Labs case is not a setback for XRP. He believes that it will be at least 2 years from now before a decision is issued by the Second Circuit, that is, if it's appealed. The Torres decision is law until then, at least in the Second Circuit. Deaton also added that even if the Second Circuit said Torres was wrong regarding her application of the third Howey factor, it doesn't mean the SEC wins on programmatic sales. He concluded by saying, "Don't let anyone underestimate how significant this win is for XRP, XRP holders, and Ripple." Now, while Ripple is making strategic moves, there's a whole different kind of drama unfolding at Alameda Research. It's got everything: leaked diaries, personal struggles, and legal battles. But before we dive into that, make sure to hit that like button if you're enjoying our deep dives into the world of crypto. In a series of shocking revelations, the former CEO of Alameda Research, Caroline Ellison, has been found to express significant doubts about her ability to lead the company. These feelings were discovered in her personal diaries, which were leaked to the media. Ellison's writings reveal a tumultuous relationship with Sam Bankman-Fried, the founder of Alameda, and a growing disillusionment with her role at the company. Ellison's diaries, both handwritten and digital, are expected to play a pivotal role in the upcoming trial against SBF. After the collapse of FTX and Alameda, Ellison pled guilty to fraud charges and agreed to cooperate with the authorities in their case against SBF. Her diaries detailed the strain of her on-again, off-again relationship with Sam and how it negatively impacted her view of Alameda and its operations. Ellison's diary entries also reveal a deep-seated imposter syndrome, with her questioning her suitability for the role of CEO. She wrote about an instinct to, quote, shrink and become smaller and quieter and defer to others, especially in the presence of SBF. This doubt, coupled with the stress of her relationship with Sam, paints a picture of a leader struggling with her position. The trial against SBF is set to begin in Manhattan in October. Legal experts suggest that Ellison could be a significant asset for the prosecution. Her diary entries, revealing the power dynamics and her own feelings of inadequacy, could make her a compelling witness. In light of these revelations, it's clear that the world of crypto isn't just about numbers and code. It's also about the people behind the scenes, their relationships, and the power dynamics that can shape the industry. As the trial unfolds, it will be interesting to see how these personal elements play in the legal proceedings and what impact they may have on the future of crypto. From diaries and drama, let's move on to some good news. If you're enjoying this roller coaster ride through the world of crypto, don't forget to subscribe and hit the notification bell to stay updated on all our episodes. Now, let's head over to Anchorage. Institutional interest in cryptocurrency is not waning, despite the recent bear market. This is the message from Anchorage, a leading digital asset platform. They've seen a surge in demand from institutional investors. These investors are not deterred by the market downturn. Instead, they're looking to expand their portfolios with digital assets. This is a clear sign that the crypto market is maturing. It's no longer just a playground for retail investors. Institutions are now a major part of the equation. Anchorage's president, Diogo Monica, shared some insights. He said that the company's clients are not just buying and holding, they're also lending and staking their crypto. This shows a sophisticated understanding of the market. It's not just about buying low and selling high. These investors are making use of all of the tools at their disposal. They're maximizing their returns in every way possible. This is a positive development for the crypto market. It shows that institutions are here to stay. They're not scared off by a little volatility. In fact, they're using it to their advantage. This could lead to a more stable and resilient market in the future. It's a win-win situation for everybody involved. Now, from growth and expansion, we shift gears to a controversy that's stirring up debate about security and compensation in the crypto world. And if you're finding our insights valuable, make sure you give us a thumbs up and share the episode with your friends. Let's delve into the DxSale network scandal. And this is our cover story for tonight. A security firm known as Security, which is led by ethical hackers specializing in security audits, reported a shocking offer from DxSale Network. DxSale, a decentralized token launchpad, allegedly offered a meager $500 bounty to Security after the firm informed them of a significant security breach. This breach, if exploited, could have cost DxSale over $5 million. The bounty offered is one of the lowest ever seen in the industry. The bug was discovered by a researcher from Security on June 8, 2023, in an unverified smart contract on the Binance Smart Chain belonging to DxSale. This vulnerability in the contract could have allowed hackers to drain funds during an initial decentralized offering. The potential loss was estimated to be around 21,600 wrapped BNB tokens, equivalent to approximately $5.2 million at the time of the report. Security's attempts to contact DxSale were initially met with resistance. The team at DxSale was unresponsive and later claimed to be aware of the problem. They stated that the contract in question was inactive and hence posed no threat. However, Security managed to get in touch with DxSale's founders and developers to discuss the situation. In response to the bug, DxSale developers decided to set high locking fees as a deterrent to potential attackers. While this solution might deter hackers, it also opens up the possibility for DxSale owners to drain the funds in a potential rug pull scenario. Despite assurances from DxSale about protection from auditing partners, including Certic Skynet, Security expressed concerns about DxSale's approach to potential security threats. In light of these events, it's clear that the crypto community needs to demand better from these platforms. A $500 reward for preventing a $5 million hack? That's not just ridiculous, that's insulting. Because while the world of crypto offers great opportunities, it's also fraught with risks and challenges. As investors, we must remain vigilant and hold these platforms accountable for their actions. Now from controversy, we move on to news out of Nigeria. But before we do, let me remind you to subscribe if you haven't already. Now let's look at what's happening in Nigeria. Bundle is a Nigerian social payments app. It announced the shutdown of its crypto exchange services. This decision made by the company's shareholders is aimed at restructuring the business to focus on CashLink, a payment solution. This move comes as a result of observed growth in the Web3 and blockchain community and the need to focus on payment solutions that meet the ecosystem's needs. Bundle users are advised to withdraw their assets from the app on or before September 12, 2023. Users in Nigeria, Ghana, Kenya, and other Francophone-speaking countries can withdraw their funds from Bundle to any preferred exchange. This decision raises several questions. Why would a company in the crypto space decide to shut down its exchange services, especially at a time when interest in crypto is at an all-time high? Is this a sign of regulatory pressure or simply a strategic business decision? In my opinion, this move by Bundle could be seen as a strategic retreat. It's possible the company is feeling the heat from regulatory bodies and has decided to focus on less controversial aspects of its business. It could also be a sign of the challenges that crypto faces in countries like Nigeria, where the regulatory environment is still uncertain. While the crypto space offers immense opportunities, it also comes with significant risks. And that risk leads us to our CBDC alert for tonight. The Central Bank of Nigeria has enhanced its central bank digital currency, the e-Naira, by incorporating near-field communication technology. This upgrade enables mobile devices and payment terminals to interact when in close proximity, facilitating convenient and contactless e-Naira payments. The central bank believes that the addition of NFC technology will play a crucial role in boosting the adoption rates of the CBDC. Editor's note, those adoption rates were pretty low, less than 0.5%. This move to enhance the e-Naira with NFC technology is a clear indication of the bank's commitment to its CBDC project. It shows that the bank is willing to innovate and adapt to ensure the success of the e-Naira. However, it's also worth noting that the adoption of the e-Naira has been less than stellar since its launch in 2021. The central bank has blamed commercial banks for stifling e-Naira's growth in favor of their profitability. This raises questions about the viability of CBDCs in countries where the banking sector is not fully supportive. It seems to me the success of any CBDC project will depend on the cooperation of all its stakeholders, including commercial banks. So what happened? El Salvador's Bitcoin adoption has led to a significant rise in the value of its bonds, defying predictions from the media and credit rating agencies and demonstrating the impact of crypto on traditional financial systems. Ripple is forging ahead, seeking registrations and licenses in the UK, demonstrating its resilience amongst ongoing legal battles with the SEC. The drama at Alameda Research intensified with leaked personal diaries of former CEO Caroline Ellison, revealing her struggles and raising questions about the role of SBF. The crypto pie is growing, folks. Anchorage is witnessing traditional institutions like endowments and pension funds exploring a broader range of assets and even participating actively in the crypto ecosystem. The DxSale's $500 bounty scandal came to light as the security firm Security claimed a lowball offer for averting a potential disaster, highlighting the need for serious conversations about security and fair compensation in the crypto industry. Lastly, Nigeria's crypto scene witnessed a contrast as social payments app Bundle decided to shut down its crypto exchange, while the Central Bank of Nigeria is enhancing its CBDC, e-Naira, with NFC technology, indicating the varied responses to the burgeoning crypto space. And that's going to do it for us tonight. I want to thank you, my listeners, because when you stop listening, I will stop talking. If you enjoyed tonight's show, then please like, follow, subscribe, leave a rating, or maybe a review. And in the meantime, we'll see you tomorrow night.